Welcome to our analysis of financial stability. Today we delve into how to spot a developing disaster before it impacts your portfolio. Financial crises rarely happen by accident. They leave behind specific structural warning signs that indicate high insolvency risk and systemic instability. The first major red flag is the debt-to-income ratio. We must watch for instances where debt grows significantly faster than revenue. Imagine a modern city skyline at dusk. While everything looks prosperous on the surface, beneath the facade, a tide of debt is rising. This rising tide represents the heavy weight of obligations affecting both nations and corporations, eventually stifling their ability to reinvest and grow. Next, let's examine the disconnect between assets and income. This is a classic indicator of a bubble waiting to burst. Consider high-end residential housing. Prices may skyrocket, but the actual rental income they generate often fails to keep pace with valuations. The same applies to tech headquarters. When stock prices detach from the underlying cash generation capability, the foundation of the market becomes fragile. When investors stop demanding a premium for risk, they are essentially ignoring the possibility of failure. This is the erasure of risk premiums. In a healthy market, a scale balances risk and reward. But as caution evaporates, the scale tips dangerously toward unpriced hazards. Low interest rates for high-risk borrowers may feel like a win in the short term, but it creates a market built on sand. The most vital lesson for financial survival is understanding liquidity. It is a resource that evaporates exactly when you need it most. When the credit cycle turns, those without a margin of safety are the first to be swept away by the changing tide. To survive, you must maintain an adequate margin of safety. This means holding liquid reserves even during the most prosperous times. Discipline in capital management is your only defense against the unpredictable nature of global markets and economic shifts. As the storm clouds gather on the horizon, the prepared investor remains calm, knowing their foundation is solid and their reserves are ready. Thank you for joining us. Remember, spotting the indicators early is the first step toward securing your financial future. Stay vigilant.